And good afternoon. This is the Elliott Wave weekly update for the S&P 500 being recorded on Friday, August the 29th at 2:50 p.m. Pacific Daylight Time. I'm here on my maximum monthly chart, and this is where I normally start when I'm doing my weekly update. If you're new and you've not watched my work before, I am beginning with this largest picture and going down from there. So we can kind of get from the big picture down to the current count that it's in place. So this particular chart, the data goes back to 1928. And from there, I started on the largest cycle that we have available, which is Grand Super Cycle. And I chose it based on R.N. Elliott's original works, and that's where he started, and that's where he placed them on the Dow Jones. So, doing basically the same thing. Grand Supercycle Wave 1 was topped in 1929, just prior to the crash, and the Grand Supercycle Wave 2 bottomed or put its low in 1932. And so from that point, we've been tracing out a grand supercycle wave 3. What's going to be inside that grand supercycle wave 3 are 5 waves of supercycle degree, of which 1 and 2 are complete. So we're in supercycle wave 3 of grand supercycle wave 3. So within the supercycle, how many waves are going to be in that third wave? There are going to be 5 waves of cycle degree, of which 1, 2 are complete, and 3 nearly so. So we are finishing up cycle wave 3 of supercycle wave 3 of grand supercycle wave 3. So in essence, a 3 of 3 of 3 move. And that lays out the dynamics of this particular rally phase, which has been in motion, let me say, the latest phase of it since 1949. Cycle wave 2 finished up in 1949. So what's going to be in this cycle wave 3? Going to be 5 waves of primary degree, of which 1, 2, 3, and 4 are complete. So we're in primary wave 5 of cycle wave 3. Now, I can start to bring it down. So this actually, I'll get to in just a moment, but we're in primary wave 5. What's going to be inside that primary fifth wave? 5 waves of intermediate degree, of which 1, 2, 3, and 4 are complete. So we're in intermediate wave 5 of primary wave 5 of cycle wave 3. So now I'm going to bring it down to the 5-year weekly chart, and there is intermediate wave 3, intermediate wave 4, which completed in October of 2022. So from that point, we have been tracing or tracking an intermediate fifth wave up. What's going to be inside of that? 5 waves of minor degree, of which we have 1, 2, 3, and 4. And so we can now say that we are in minor wave 5 of intermediate wave 5 of primary wave 5 of cycle wave 3. So you can see we're getting very, very close to finishing this. Now I'm going to drop it down to the daily chart. There's the minor fourth wave. So we're in minor wave 5. And what's going to be inside of minor wave 5? 5 waves of minute degree, of which 1, 2, 3, and 4, by my track, are complete. So here's the story. We are in minute wave 5 of minor wave 5 of intermediate wave 5 of primary wave 5 of cycle wave 3. That's how close I think we are to a major longer-term top in the form of cycle wave 3. So what comes after would be, of course, a cycle fourth wave. What's going to be inside that cycle fourth wave? 3 waves of primary degree labeled A, B, and C. So once we get to the top of cycle wave 3, we're going to be looking for cycle 4 to begin. And that cycle fourth wave, I got to go back out to my monthly, accordingly, would be expected to come down and find its terminus, its endpoint, within the fourth wave of 1 lesser degree. So if we're starting on a cycle fourth wave, one lesser degree is the primary, and there it is. That's why I placed that box there, because that is, oh my God, primary, come on, yes, primary wave four. And that actually, primary fourth wave, we reached high, we came down, we went up, and then we had the great financial collapse. That was the C wave of primary four. So, and if those of you who were trading back at that time, I was like, wow, that was quite the drop. But yet, do you see what we've done? Off of that low in 2009, that low was, well, actually, it was a little bit different. Let me get in there. I want to get it right on there. Was 734. And I actually think it was actually a little bit lower. Let me just get in there quickly. There it is. It was 667. I'm rounding it up. 667. There it is, right there. And so it's going to find its terminus at the within the price territory of this fourth wave. And normally it's at that towards the low. So we're thinking, yeah, we have the possibilities of coming down within this as cycle wave four unfolds. Now, let's go back over to this one and then go back down to the daily so we can see inside minor wave five. Here's one, two, three, and four. And so we're inside that fifth wave. I'm going to come down to the hourly chart. So now we're inside. There's minute wave four. So we're going to have 5 waves of minuet degree to complete minute wave 5. And by how I'm counting it or how I'm viewing it, minute wave 5, in my opinion, will form a diagonal triangle. And so as we just kind of peak, as we get up to the peak, think of a triangle formation. We're going to have a bottom and a top, and it's going to wedge up till it gets to that high. So here we have minuet wave 1, ABC, minuet wave 2, ABC, minuet wave 3. Now, here's where it starts to maybe get a little tacky, but maybe not, because I'm actually thinking that this wave 3 should find its way, I'm thinking closer to 66 rather than 65.08, which it reached yesterday. So with that in mind, I counted ABC, X, ABC, and put an A there. Now, originally, some may say, well, you got the ABC, A, B, and then an ABC, or just a 5 waves up. You can count it as 5 for the C wave, and that could work. Undoubtedly, that could work. But I just, and it did kind of come up and meet 0.618. But again, I could, and then this would be, that would be minuet wave 3, minuet wave 4, and then we would have still probably a C wave down, and then still for 4, or uh, part of this third wave. And again, the conversation or the discussion could be, is it possible for it just to subdivide, which it did in A. You've got an A, B, C, a B, 1, 2, 3, 4, 5, a C. So this could be the same. We have an A, a B, and we get a 1, 2, 3, 4, 5 for a C wave and end up here. And it kind of still fits, because don't forget, it's like now the market is pretty much not guaranteed, but really counting on at least a quarter point cut in rates in mid-September, September the 17th. So I was thinking to myself, well, okay, if that's still in and the market's still counting on it, then we probably shouldn't be dropping out of the sky too harshly in advance of that happening, because it could really just dampen the market's thoughts of exactly, are we going to get it? I mean, the PCE index did come out, and it did show that there was a uptick, that inflation still is there and still could be problematic, but it seems to be a little bit controlled. And so the market still is feeling that that is going to happen. Now, there's some other reasons I believe today, the largest being that it was the August monthly, so the end of month expiration. And I think that just a lot of things had to be taken care of in that respect, particularly in stocks that have kind of, uh, started to retreat off of highs. Uh, Number one on that basis would be Nvidia. And so we've had a lot of other stocks kind of just moving around and creating a little bit of upswings and downswings. But today kind of came on the heels of a couple of announcements, and one of them being is that about 30 countries have announced that they will not send post, so the mail packages to the United States, basically because there was that they were coming in tariff free or duty free, and so that has stopped. So there will be tariffs, there will be duty to be paid, and so they decided not to do them. So that doesn't mean that we won't be getting packages from overseas. I think it'll just be costing more. So in any case, that started to bring things down because we have companies like eBay, Etsy, Amazon, actually, which sends packages all over the world. And so we I looked at it that way, and the market just started to come down. But I think also between the expiration and how the markets, when they start breaking these gamma levels, really start to kick in. And so that's really also what was happening today, um, in the S&P, in the NASDAQ, that we saw, within the ETFs. So in the Qs and in the spiders, that we really started to see a breakdown of like large gamma 3, or and then volatility triggers and things of that nature. So that all caught up with it, and we had a pretty good slide. And then once that initial slide was done, the market just went sideways for the balance of the day to let everything expire. Now, how I think that could come out accordingly, if I'm looking at this correctly, we're going to have a little bit more. There's our markers for a B wave coming down. So we're basically just running fibs from there. And so, B wave 50 to 62%. So we're kind of looking, we've already come down to 382. That was 64.43. And then we have 64.24 and 64.04. So I'm thinking that we'll hang above 6,400 in the SPX, which I think is going to remain an important level. It does so far that we had today and this week, that 6,400 level we saw as support, and because it was large gamma 4 and the put wall. Now, I don't know how much, if any, of the put wall was in this end of month expiration cycle, and because that's now done, that gamma is released, that gamma expired. So unless it's been moved out, unless there are positions in the next week or moving out to September, then 6,400 would remain in effect as far as a large gamma 4 and a put wall designation. And so if it were to be taken out, so let's just say that next week the market just goes, nope, we're done, and they come down and they do a little bit of a flush, it could present a case where the market then drops, but has to hold above 63.41. Actually, I'll give you that number exactly. 63.43. So actually, let's say 63.44, because the low is 63.43.86. So if it starts to drop below 63.44, then it's really going to be invalidating the start here. So I'd have to back up this count and say that this is wave A of 2, this is wave B of 2, and we're coming down in a C wave, which then would be expected to go below here. And I think we have some numbers that bring it down to like 6,200. So we still have things out there where the counts can still be applied, which would show that we still have a decent rally left to the upside. Now, I know that also because I'm doing it, I am going over reviewing alternates to really start to think, it's like, well, what if it's all done? we waited, we waited, we waited. We were looking for the SPX to get above 6,500. It did that. Oh, excuse me. It did that yesterday and it did it today. So again, I bet it did it overnight. Let me just say that. So in essence, then the market may have topped, but under the current labeling, it would have to be a third, and this is a four, and we still have a fifth up. But I've already discussed, I don't think it fits as a completed third. Doesn't mean it can't be, but let's understand that when we're in a corrective phase, which a wave two is, then there are basically 13 different variations of what the market, what the pattern could be, and still be corrective. So, we have just straight ABC, we have a double ABC, we have a triple ABC, which, in certain groups, it's a WXY and then a WXYXZ. So we got, all those combinations coming out. We have diagonals. We have triangle patterns. We have a more complex ABC. So this was just a straight ABC. And I was thinking that, well, actually, I need to fix that if I'm going to put that A up there. Yeah, but I'm thinking that the two is here, and that's A of three, B of three, and then C wave of three. And I still think we can get up to the 6,600 area. But if this starts to break down further and say it breaks 6,400, it could be that the wave two isn't done, and then this becomes subminuet wave A, subminuet wave B, and we're coming down in a five-wave C wave, and that would be expected to take out that low at 63.43. So that's kind of what I'm making reference to right now, that the combination is if it's still in this wave two correction, there's all kinds of things that kind of fit inside this. But if I can leave the two there, then it should be pretty much a straight A, and then we do a B, and then we do a C in terms of an ABC for that wave three, and keeping with the diagonal. So, and even if it's going to be that we have to kind of backtrack and say, nope, it's not A, it's all of three, then this is going to be ABC, ABC A, ABC B, and then this would work out to be five waves up for a C wave. And so we could leave it at that, and that would put that wave three here. Again, 618, yeah, it fits. But it in a triangle pattern, it isn't always that wave three has to be the longest wave. That would be in an impulse, and this is in a diagonal. So, but wave four does overlap wave one, etc. In this case, it would, and it did pretty much right away. So that could fit. I'm just going to see how this all plays out. A wave four, we're still looking for it to come down a little bit more in an ABC, and then put the four, and then we'd have that five. But that also would also speed up to possibly before the Fed meeting. Again, we have a time factor as well. And then we just have seasonality comes in, and normally September and October can be a mix. It can be down market, down cycle, or, we could have more of just mixed in September and maybe a quick rally, which would coincide with the suspected or expected rate cut mid-September. So we still have a lot of things to kind of work with and realize that they need to be factored in and see where the market's going to go. But for right now, I'm going to leave it the A. We're going to come down in a B, and we still have a C wave up to complete this third wave. And then we still come back down in a fourth wave and then rally back up and the fifth wave to complete the cycle third. And I think that's where what we can do into September, the end of September, beginning of October, and possibly reach that high for the cycle wave 3, begin the cycle 4, and so October would be like a down month, and to October, November, maybe we get down to that A wave, right? Primary A of cycle 4, and then we rally. So the surge uh, that AI is continuing to suggest for the end of the year, December, could be the C wave back up, or excuse me, the B wave back up within cycle wave 4. And then at the start of 2026, we get the cycle C wave. We get not the cycle, we get the primary C wave of cycle 4 to start the new year. And that could be very devastating. That could be a very, very sharp drop. And then that would complete cycle 4. And then we start a cycle 5. So the whole thing begins and we get that big rally in 2026. Now, also the time factor within the cycle, you'd be thinking that that cycle wave 3 is 76 years. So you'd really be thinking it's going to take a lot longer than just a month or a year to complete all of these moves. But one thing that I have noticed is because of algorithmic and everything's quantitative, things speed up. Things can speed up quite a bit. So time factor, I know it's out there. We're going to have to take a look at it, but I don't think that there are any hard, fast rules that have to be followed. All of the time are the sequences, the fib sequences that go along with things in terms of time and cycles. They really have shifted. They really have changed because of algorithmic trading. So I'm going to leave that there. So in any case, here we are. I think we have a B wave to go within the third. That's minuet wave 3. And then, so I really don't necessarily want to come down and break below the bottom of wave 2. I think I'd like to stay up in here and put in that B wave and then come around. That one shouldn't be there, by the way. Let me just get rid of that. Both of those. Yeah, forgot to. So we got the 100%, and that one I think we would allow, but not below. So then I think it's the two guys it has to come over. But we'll see. We will see. Either way, I still think that there's a rally, and I think that rally will put us to new highs again and get us up closer to here. Now, we still have additional fibs here. Now, this would be for the third wave, and that would have to be a very powerful rally, right? So the C wave would have to be very, very powerful and to kind of get up there. But the 100%, I think, is very doable. And that then would then be wave 3, and then we get a 4, and then we get a 5. These would come off, but we'd still have this one at 68.54. And we actually have one more, a couple more up here. So that's not out of the mix yet. Let's put it that way. I keep a very close eye on the market because if we really start cutting up and coming down through levels that should be holding, then we do have to consider some of the alternates are, is this all done? And so to best of what I can figure, I don't think so. But as it progresses, we will see. All right, let's go over and take a look at the ES. Same thing I got going on here. There is, let me go just out to the daily. So in the daily we have, there's the 4, and there's 1, 2, 3, and 4. And so we're inside that minute fifth wave. And so let me go back down there, and it's really over there. And so here we have wave 1, and then wave 2, and then an ABC, XABC wave A of 3. And the other reason I'm using this because it broke. It broke, put in a new high. Yes, I can put it, but I think it should come in higher than 0.618. I still think it should come in somewhere around 100%, where they're kind of equal. Not necessary, but that's what I'm believing. So if we have to put the 3 up there, then it's in the minuet wave 4 coming down. Same picture where we're going to look, it's overlapping wave 1. Yep, pretty much did that right away. And so that's in there, but I'd be looking for a little bit more coming down. If I break it down to the 15-minute, now we're inside this thing. Could this be A, B? 1, 2, 3, 4. We got one more 5. And then you could put minuet wave 4 down there or the B wave, right? A, B, 1, 2, 3, 4, 5, C, C, and then a B. And then we come back up to put that C wave in. And then I think still, if we come here, we get above that. We get up closer to up here. And then that just finishes the third wave. We come back down to 4, and then we go back up. And I think then we're just marching right into that rate cut, the expected rate cut. So we'll deal with that later, but right now, I think that's kind of part of the deal. Now, the hourly chart, if we take a look at moving averages, see, they're failing us. So what was in alignment to go up has now reverted back to almost. They got the 200 being flat, continues to provide some support at 64.66, which it bounced around all day today. I mean, after the initial decline. And then we have the 8 breaking right below the 50. We have the 20 breaking below the 50. Now, additional downside is probably going to pull them all possibly down below that 200. And so we got to be careful on the hourly. And the daily chart, I doubt it's really registering much. Yeah, it isn't. The 8's going flat, the 20's going flat. They're kind of just cresting a little bit, going to go sideways. But the daily remains in fairly good condition for the market to continue to go up, which is another reason why I think that we still have additional upside to do, because the daily's not really suggesting anything other than, yeah, we got a little bit of a correction, consolidation. We should still go up. All right, that actually is about where I want to finish on this. I don't think there's anything else that I want to be adding. We'll have updated gamma levels on Tuesday. All right, don't forget, Monday is Labor Day, and it is a holiday. And so I think that economic data, well, we don't have too much. Next week, we've got consumer credit. Oh, actually, it is. We have producer prices and consumer prices. No, I take that back. I was 1 week ahead of myself. So on Monday, nothing. On Tuesday, S&P final U.S. manufacturing PMI, the ISM manufacturing and construction spending. So we begin to get those to deal with, and that also can deal with inflation. So we get the manufacturing purchasing managers, ISM manufacturing construction spending on Tuesday. On Wednesday, we have job openings, factory orders, 2 Fed presidents out speaking, Fed beige book on Wednesday, and auto sales throughout the day. So nothing too heavy. On Thursday, ADP employment initial, and then U.S. employment data. And this is going to get real interesting because of what happened last time those statistics came out and the president decided he's firing the person who was responsible to produce those numbers because he didn't like them. So anyway, so we have ADP employment, initial jobless claims, U.S. productivity, U.S. trade deficit, S&P final services PMI. This is all next Thursday. ISM services, and then the Senate banking nomination hearing for Stephen Mirren to be a Fed governor. And I think that they're forcing that one through. I think that should be that's supposedly going to be the replacement for Cook. So it's, yeah, boy. This will be an interesting week. Friday, then we have U.S. employment, the actual data, the U.S. employment data coming out on Friday. So could be interesting week. All right, that's going to be it. The next update will be on Tuesday. I also will be putting together an additional um, update, but not necessarily on the markets, but on just how I'm going to be moving forward in terms of the memberships. And I think I've mentioned previously, but I'll mention it again, that I am restarting the Logical Signals trade room. And so my morning updates will be a part of the trade room, and I'll be going into more detail about that as well. And I'll be looking for those pretty much to get started, or at least putting out the data so about them and how people can sign up for them, um, so that we're ready on Tuesday. Okay, thank you very much. And the next update will still be the morning update um, on Tuesday.